Imagine that you have a unique opportunity to turn dilapidated properties into thriving homes, all while maximizing your profits in the fast-paced world of real estate investing. We are growthsense.com. We built a platform that allows investors to buy, sell, and invest in real estate properties of all kinds, in all shapes, and in all conditions. What if, instead of holding on to properties for years with uncertain returns, you could transform them and reap quick rewards? This is the allure of fixing and flipping real estate, an approach that can significantly impact your financial future. Recognizing the right scenarios where this strategy shines is crucial for investors looking to enhance their returns. In this discussion, we go into 7 compelling scenarios where fixing and flipping proves to be more advantageous than taking a long-term holding approach. Number 1. Market conditions. In a rapidly appreciating market, the demand for homes can be sky-high. Investors have the chance to buy undervalued properties, renovate them swiftly, and sell them for impressive profits before any shifts in the market occur. Timing is everything here. Staying vigilant about local trends and utilizing real estate analytics can help you spot the best opportunities. Number 2. Short-term capital gains. Completing fix and flip projects within a year allows you to realize profits quickly. While taxes may come into play, there are strategies to minimize these costs. A less commonly discussed tactic is live-in flipping, where living in the property for at least 2 years can qualify you for significant tax exemptions on capital gains. This can greatly enhance your overall profitability. Number 3. High renovation potential. Properties. Demanding extensive renovations open the door to adding significant value through strategic updates. Think kitchen remodels or enhancing curb appeal. It's essential to plan renovations that resonate with buyer preferences in the area. Conducting surveys or researching local design trends ensures your improvements align with market demands. Number 4. Limited cash flow. When holding real estate results in little cash flow due to hefty mortgage payments or maintenance costs, a fix and flip strategy becomes a more appealing alternative. This approach allows you to generate profits quickly while avoiding the burden of ongoing expenses. Creating a budget that accounts for all potential costs associated with the flip can help maintain financial stability throughout the project. Number 5. Market volatility. In unpredictable markets, property depreciation poses a significant risk for long-term investors. Fixing and flipping enables you to act quickly, purchasing properties at lower prices and selling them before downturns occur. Analyzing historical market data can provide insights into patterns of volatility, helping you make informed decisions about when to enter or exit the market. Number 6. Investor goals. For hands-on investors who thrive on renovation projects, fix and flip strategies often prove more appealing than merely holding properties. This method allows you to take control of your investments, manage renovation costs actively, and witness immediate results from your efforts. Joining local real estate investment groups can provide networking opportunities that lead to valuable partnerships and insights. Number 7. Financing costs. High financing costs can diminish the appeal of holding real estate compared to quick flips. Selling a renovated property swiftly helps reduce interest payments and holding costs. It's crucial to shop around for competitive financing options and consider short-term loans tailored for real estate investments. Partnering with other investors can also improve financing terms and reduce individual risk while boosting project profitability. Understanding market conditions is vital for the success of your fix and flip endeavors. The real estate market is a dynamic landscape, influenced by supply and demand, interest rates, and economic trends. For example, in 2021, home prices surged by about 15% nationally due to a shortage of homes combined with high buyer demand. Investors who timed their flips right during such booming conditions reaped substantial rewards. Conversely, entering a declining market can lead to losses if property values drop after purchase. Successful investors rely on data and research to assess local market conditions before diving into projects. They scrutinize neighborhood trends, like how long homes stay on the market and recent sales prices, to make informed decisions about their investments. With an average gross profit of $67,000 on flipped homes in 2021, understanding when and where to invest becomes paramount. The financial advantages of fix and flip strategies are substantial. Quick profits and lower holding costs are key drivers for investors eager to maximize returns. Unlike rental properties that incur ongoing expenses like maintenance and property taxes, fix and flip projects typically have shorter timelines, allowing for rapid capital recovery and reinvestment opportunities. When choosing a fix and flip strategy, several critical factors must be considered. First, location matters immensely. Properties in desirable neighborhoods tend to sell faster at higher prices. Second, understanding property condition is essential. Minor cosmetic updates may yield better returns than major structural repairs that can drain time and resources. Staying informed about market trends helps identify opportunities and risks effectively. Additionally, selecting the right financing sources can maximize profitability. Quick access to capital allows for faster purchases and renovations, key components in thriving in this competitive space. Accurately estimating renovation costs is vital. Creating a detailed budget that includes all potential expenses helps ensure profitable flips. Establishing clear timelines for renovations prevents increases in holding costs due to delays, which could jeopardize favorable selling conditions. Lastly, having a solid exit strategy is crucial before embarking on any fix and flip project. Whether planning a quick sale or considering rental income if the market shifts unexpectedly, being prepared enhances your chances of success. Finding distressed properties is fundamental for maximizing profits through fix and flip strategies. Resources like growthsense.com offer valuable tools that assist in locating these opportunities efficiently. Distressed homes, often facing foreclosure, can be acquired below market value, renovated, and sold for impressive profits. With careful planning, returns of 20% or more are achievable. Growthsense.com equips investors with insights into local market conditions, property histories, and estimated renovation costs, empowering informed decision-making. By leveraging data to analyze properties in growth areas or revitalization zones, investors can uncover hidden gems often overlooked by others, boosting both success rates and profitability. Navigating the world of fix and flip real estate investing presents both opportunities and challenges. Understanding when to act, how to strategize effectively, and being aware of market conditions are essential components of success in this dynamic field. As you contemplate your next steps in real estate investing, consider how these insights can guide your journey toward profitability. What if this knowledge could be your ticket to transforming not just properties but your financial future? Stay tuned as we dive deeper into this fascinating world of real estate investing. There's so much more waiting just around the corner. Visit our site at growthsense.com for additional resources that can elevate your understanding and success in the realm of fix and flip investments.